All right, cool. Let's see. So let me ask you guys something. Who here has been in since like April, May? Who in here has been in the group since like May, April, May ish? Cool. So about 2 people, 3 people. So back in May, right? We discussed this range, right? This is the main range we discussed for literally like 2 months, right? And for the most part, it was pretty, how do I say it? It wasn't the hardest thing to analyze, but it wasn't the easiest either, right? So the difference between then and now to me is obviously how the structure is moving, right? Compare this to this, right? And if you want to compare it back then, compare it to previous ranges, but these are different because I feel like due to the whole corona situation, right? This was one cycle. Then quarantine started. We had essentially a big push to the downside that took out multiple levels of liquidity. Then we had one high that took out a ton more of levels of liquidity. So what that pretty much signifies to me is a type of reset. So this here is something completely new that I'm not going to try to compare to, for example, something like this, right? So because this happened, right, liquidity grab on both sides, I'm assuming that we're starting something new, right? And that was pretty much where I derived, the idea that this would be a continuation of downside, right? And that is what's happened over the past 5 months, right? 4 or 5 months, right? So now the move has happened, right? So the impulsive move has already happened, right? The moves have already been caught, the moves have already occurred, but every impulse needs a correction, right? For the most part, I'd say about 95% of impulses do correct themselves, right? There always could be a possibility that it doesn't, and that's cool, right? But the interesting part here is trying to analyze a type of correction, right? This is a correction, this is a correction, right? This is the beginning of a correction, right? And the reason why I'm saying now that it is the initiation of a retracement, correction, whatever, right? Looking at structural highs, right? Structural highs, we have now officially broken through it, right? So technically liquidity there, right? So now, right, ideally, right, based off the material, based off what we talk about, right, ideally you should be essentially looking for that, right? Who knows, inefficient pricing there, wick here. Damn, my bad. And based off of what we talk about, the way that we trade, that's ideally that's essentially the game plan, right, for where we go from here. But the tough thing to analyze in this aspect is how to judge where this correction will go, right? Because we've already had, in terms of a macro basis, we've already had the emphasis here where pretty much we're showing an unwillingness to continue higher, right? Hence why that high hasn't been taken, right? And this is not a deep enough retracement for me to say there's liquidity sitting up there, even though there is, right? That's not I'm trying to say that these aren't equal highs. That's essentially what I'm trying to say. So because this to me had reasoning to it, right? we now had the impulse to the downside. So now the tough part is trying to judge how far this correction will go, because it's the first time we're seeing a real correction since this new cycle has occurred, right? Because this is nothing like what this has been. This has been moving faster in this year than it has in the past 2 to 3 years. Yeah, since like 2017, right? So even though we're going to take these opportunities, right, you need to keep something in mind, and that's that you need to understand potentially how far this retracement would go, and potentially when and where you should take profits or try to look for hedge positions, right? So that's pretty much all there is to that. This is somewhere where I'm pretty much trying to sit on my hands, right? Whether it's for like the next week, 2 weeks, I really just want to see after we see this correction, and if we see that impulse to move to the upside, I really want to see how we react from different levels, right? Because honestly, if we reach here, I'm honestly wouldn't be thinking something like that. I would not be thinking something like that. I would more so be thinking something here to take higher, right? And that's just because this structure is now beginning, right? Obviously, this is a new form low until that new structural high is created. So I'm not really too worried about that low, which is why I'm signifying more here levels of liquidity, and more so trying to find that higher low that's going to occur to then take to the upside. Obviously, this could be that solidified low and we just take off from here, right? And that's fine, because either way, right, our first target is equal highs based off of this structure break to the upside, right? Even though we haven't reached even equilibrium, we reached equilibrium pretty much, right? But the fact that we have that structural break here, that's what's significant to me to signify more upside and potential of actually seeing a real retracement this time. And as looking at it from a Wyckoff perspective, it's a bit tough because it's still happening, right? So, right, pre-supply, selling climax, secondary test phase B, right? It's your automatic rally. This is your range high. And from here, essentially, after secondary test phase B, a spring, right? Test is somewhere in here, right? That's showing optimism, right? And now this is why I'm saying potentially we can be seeing an LPS, right, to then give an SOS, right? And that's by looking at it from just a technical perspective, right? Whereas with EU, it's a bit different, right? Obviously, this could be preliminary supply, buying climax, secondary test, automatic rally here, this arranged low, secondary test phase B, upthrust, I'm sorry, and upthrust after distribution, which led to a minor structure break there. So now remember when we said that we wanted, that retracement there before going lower? I'm kind of mad that I missed that. No, I'm not gonna lie. But looking at this now from an intraday time frame, right, there's always a possibility we can reach back up here. This could always be a level of liquidity, and we could potentially find an SC or somewhere in here, right? So who knows? I'm confident we're going to see this retracement. I don't see this just flying from here. That would be pretty funny. But the fact that we've pretty much tested this level of structure here is what's giving me those signs, right? Could have been a possibility that this was that low and then we start going higher. And I'm like, okay, structure signifies that we want to go higher. But obviously that didn't happen. We made a solidified low, but we didn't break these highs, which then created that liquidity grab here, right? So I'm more so thinking about, obviously the bigger picture here, but in terms of, potentially finding a trade, right, it's a bit complicated, right? Because like I said, we really don't know how far this retracement can go, but every time we see moves like these, big moves, right, start to essentially accumulate, distribute, or whatever, whatever direction it's going in, we see fat moves, right? Fat moves, right? So I'm not too worried about, catching the absolute high or catching the absolute best entry, right? All I care about is getting in, right, with obviously with our approach, right? But have logic supporting me behind it to then give me that big move. If that's what's not gonna happen, right? If that's what's gonna happen, right? So it really just ultimately depends, because last week's closure was, yeah, pretty dumb. If you ask me, pretty dumb. And so just from there, I really do want to see what happens to our intraday levels. And by that I mean I want to see what happens between this high, this low, and this high, right? I really want to see, you know, what price does inside of here to then judge to see if we're going to either liquidity grab, come back into the range, then give a solid structure break to then give a pullback and then go higher, or right, if we take out this level of liquidity, come back into something here, right, and go lower, right? So who knows? Yeah, because this is Friday's high here. I definitely see that being taken out just because it's inside of equilibrium pretty much. Yeah, right on equilibrium. But who knows? We'll see. I'm waiting for Monday's overlap just to see what occurs from there. I don't think we have any big news this week. No, I don't think so. FOMC on Wednesday. Pretty much that's it. So yeah, let's see. What have you guys been saying? There's an area that I'm watching. What area are you watching? Let's see. So just off the bat here, right, as I'm going through time frames, inefficiency here, that is tapped. The open of that candle has not been open. It's not been tapped. So that's my 40-minute potential SC inside that wick. $50-minute. What inefficiency? You're talking about filling this one? Yeah, so for me, like, this is very appealing. That's very appealing. And obviously this is very appealing too. Yeah, so definitely want to see what reactions occur here. If that's what happens during London. So definitely excited to see what happens there. Back to John's question. Can we go over entries? Well, let me ask you, have you been watching the pair breakdowns, and have you been studying the previous markups? And that's for John. Have you been studying those? Cool. So what is your what's the issue you're running into with this? And it'd be better if you give me an example, so I'd rather walk you through that. Um, like what is the problem you're seeing based off after studying that material?
Can you hear me?
Yeah.
Yeah, my biggest issue is really the entries. It's hard to spot good entries. I don't when I'm looking at the bigger time frames and then I am uh, going down the time frames to find a better entry. I'm having a bit of difficulty finding into it. And then the second thing would be when I do find an entry, I'm having an issue where I'm putting my stop loss.
So you have to
So
show
if
me
I
an example.
choose,
Like for example, to show
well,
me a trade that you took that didn't go your way because of your entry.
um, I would let me see. Okay, so go to a gold if you don't mind. Go to gold. This was recently. This was 9/11. So yeah, on gold, I was on the 3 minute time frame.
Okay, but first, how
Okay.
how did you derive a bias and trade?
Okay. So I was looking for a buy.
Mm-hmm. Because,
I was looking for. Okay. I seen equal highs.
but what
If I'm
time
not
frames
mistaken,
and where?
15 minute. I seen equal highs.
So you got your bias from the 15 minute.
Yes.
Okay.
Yeah. I don't have my markup in front of me, but I'm looking at my phone and I'm looking at the order. So
Are you on
I'm
your phone or are you on a computer right now?
I'm on the computer, but I'm also looking at my phone.
Okay. You can annotate then if you're on a computer. You can annotate my screen.
Speak. No, no, I have another computer where I actually trade. I'm on I'm just on a regular laptop.
Yeah, but I mean you can still annotate on the Zoom call on my screen.
Oh, annotate. Okay.
Mm-hmm.
Let me see. Okay, so I was looking for a buy around 1945.06. Okay, so let me see. Grab
I'm sorry. Where?
1945.06
Oh,
or 1945. So basically, I seen a good sponsor candle on the 15 minute. I dropped down to the 3 minute. I seen that there was price inefficiency, and then that's when I took the
so you were talking about this.
hope. Uh, it must have been yes. Go down to the 3 minute.
Mm-hmm.
Okay. Crap. It's really hard to see your screen. It's just kind of small. But basically, I was targeting 1954. So I seen that there were equal highs. I was trying to target it. I
You were
seen the price
aiming
inefficiency.
1954.
Yes.
And where were the equal highs? Oh, right here. Okay, good. Mm-hmm.
Okay. And yeah, so I mean, looking at the entry, I mean, unless it was just bad luck or maybe manipulation, I really don't
Oh,
know.
well, you first need to show me what SC you're looking for, or what SC you were pretty much trying to
I,
play off of.
I
I think
think
you're
you
talking
had
about
it.
then this one. Then is this what you were trying to target?
I had my buy limit at 1945.06. That's including the spread, so it must have been around
This must have
1944.80,
been this. Okay,
1944.70.
okay. I think I see here.
Yeah, 1944.70,
So it was the 11th.
1944.80.
So it was the 11th. So that means you were probably looking at either this one or this one right here.
Yeah, well, there was definitely a break of structure first. So it must
But
have been where
you
you
gotta
had the
show me
high.
though. You gotta show me, or else I can't go based off your words. I don't know what you're saying.
Yeah.
So you gotta
Okay.
show me on the screen what are you looking at? What are you? I need to tell you what you're looking at.
Yeah, I wasn't prepared for you to ask me that. I don't have it with me. I
But
just remember
I
when
mean
I
that's what
was
I'm saying though. Just annotate my screen.
so let's see, 1945. Okay, so it must have been around here
Oh,
that I
okay,
was
so it was
trying to
after the
enter
move.
based off crap, around this area. So there was price inefficiency from my understanding.
And what equal highs were you aiming for?
I was trying to shoot at over here.
Oh, okay, okay. So you're taking this pretty late, right? This is you're in Florida, right? This is about 12 p.m. for you.
Yes, it was
So 1 p.m. almost, right? So
yeah, this
there is a you're essentially trying to play this candle, right?
yes. So I looked at it on the 15 minute, and then I seen the price inefficiency on the 3 minute, and then I was trying to play the price inefficiency. I actually did two entries. I'm not too I'm not too good at mastering the entry. So what I did is I put half of a percentage on the beginning of the
Of the open and
price
50%.
inefficiency. Yeah, and then I actually put one in the middle.
And where was the inefficiency?
From my okay, so
So you think you're trying. Is that what you're pretty much aiming
yes,
for your
yes,
second
yes,
entry?
correct.
Okay, so
Yes,
you're probably aiming open here.
yeah,
All right, cool. So before taking your entry, right? Um, there is no reaction, right? Which means you literally bought just for SL to hit because the real move here had already happened here, right? The equal highs have already been taken, right? In terms of structure, right? Low, high, right? No real correction here, right? But I'm looking at highs, and I'm looking at highs being created, right?
yes,
This is that final high that is made. And then we now have the unwillingness here to go higher because obviously the next high is below this one. So from there, just looking at this, obviously this time frame structure and looking at what you're doing, this is already a lower high for me, right? And we've pretty much left equal lows here, right? So who's to say, right, price isn't coming up here to meet that inefficiency there to then go lower, right? So for one, you didn't wait for reaction upon your point of interest, and two, the market structure is already showing that it wants to go lower, right? And then your initial mistake off the bat is you told me you got your bias from the 15 minute, right? So what if your daily's bullish and your intraday is bearish, right? What if you sell but the bigger picture is up and it goes up, right? So what do you do in that scenario?
well, I actually did kind of like a semi top down analysis,
Mm-hmm.
and I seen that gold is going up right now.
In terms of what time frame?
I mean, you can look at from the daily down, it's all going up.
Yeah, but these are all lower highs, and this, right? You studied Cubanks and stuff. What kind of closure is that? What kind of closure was The 10th.
You mean that as far as the candle?
Yeah.
Doji?
Yeah. So what is that supposed to signify?
Reversal?
Exactly. So what happened here? Downside movement. What is going to happen here? Downside movement. Because of that closure. I'm not going to buy if that is literally yesterday's daily closure. That makes no sense to me in terms of this time frame. So if yesterday's closure is already showing that, right, that means that this is the range that I'm playing in. Meaning I'm only going to buy here off the bat based off of that rule. So I'm zooming into a POI. I'm only going to buy anywhere here. I'm not going to focus here because this is all in premium. I'm not trying to buy in premium. I'm trying to buy in discount, especially from the swing trader perspective, right? Because your daily bias is up because it's been going up for months, years, right? It's been going up, but just because that's the case doesn't mean I'm going to blindly buy, right? So when we're looking at the range here, this is that range, right, that we had from the daily time frame. I'm only going to buy down here. I'm not going to buy up here, right? Because for one, right, you're trying to buy here, correct? You're trying, this is around where you're trying to buy.
Make a little short move. I was trying to get like a good 5-to-1, 6-to-1.
Yeah, but that's not the point though. That's not the point though. The point before even thinking about that, you got to get the direction in the right direction, or else you're just throwing away risk, right? Off the bat, right? Looking at here, right? This is the final high being made. This is a break of structure here, meaning they should be now in sell scenario to sell into discount. I'm sorry, or because that is what this time frame is showing me, right? This then reached inefficiency there, right, and gave the reaction to downside, right? But obviously you tried to buy here because you were so stuck in this range, when in reality, if you zoom out and you look at actual structure points here, this is a break of structure. You should be looking for sells. So you're in the complete wrong direction.
See, and that's kind of like the issue I'm having. Because see, like where you're pointing at, yeah, absolutely. I seen that. Okay, yes, it did break structure to go down. It did break structure to go down. And we see up here, like you can see that it broke structure to go down, but then it broke structure going back up.
Yeah, but that's from a scalping perspective. These are scalping time frames where this is occurring. Right, this is M1 time frame. This is the break of structure on M1 time frame. This is not significant to me unless it's lining up with every single bias, with every single time frame.
Yeah, I guess it's that time frame confluence that I'm having a little bit of issues with.
So your daily is bullish, your intraday is bearish. So that means I'm not gonna buy on this until my intraday is bullish again. That's just the easiest way to put it. Right, and obviously
so you're basically just gonna follow the daily no matter what.
In terms, well, I mean, if I'm a swing, do you know what kind of trader are you? That's the first question you gotta ask yourself.
Honestly, I would like to be more of a scalper. I don't really like to stay into trades much. That's why I wasn't targeting something crazy. A good 5-to-1, 6-to-1. And I do that maybe 2-3 times. I mean, I'll be happy, man.
Exactly. So think about it like this then. My daily is doing this. Right, I'm not here on my daily, which means now from a scalping perspective, I can catch 1 buy, 2 buy, 3 buy, 4 buy, 5 buys. Does that make sense there? Right, ultimately what you want to do is continue trend. Right, why would you fight your daily time frames just because you're a scalper?
Yeah, well, I mean, that's the reason why I was going for buys. That's the reason why I was going for buys.
Yeah, so your daily is bullish, right? Your intraday, well, this is pretty much your swing. Your intraday is bearish, but your scalping structure is bullish here, right? But if you're looking at it also from that structure perspective of that M1, right? You're trying to buy here. Low, 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 low. That's already a structure break there. So you're trying to buy after this bearish structure break here, because this is the final low that created the final high. So you're trying to buy right after a bearish structure break occurred. So your best chance here is catching a pullback and then coming down. Right, but do you understand when I'm saying that your structure, you're not in the right direction in terms of structure?
On the smaller time frame.
On every time frame, pretty much. That they have to line up. Right? The only way I'm gonna sell on bullish daily structure is if it's showing daily bearish signs, right? Because then those are reflected through the intraday time frames, and all I'm doing is using the smaller time frames to get an entry to then go lower.
Now, to determine the intraday direction, are you basing that off the 1 hour, 4 hour?
Pretty much, yeah. No, well, 4 hour above is more my daily. I mean, more my daily bias is kind of. These are your more intradays here.
Okay.
I'm pretty sure I highlighted them in Zoom.
Even though I'm scalping, I'm just used to doing this.
Scalping intraday, swing position. And it doesn't matter specifically, bro. You have to understand, intraday. What is intraday for you? What is intraday for me? It doesn't really matter what it's for me. It's for you. Like, for example, intraday structure. It's something it's not something I can explain to you, bro. This is something you're gonna see yourself, because ultimately, right? To me, my swing time frames are up here because these tell me the longer term direction. These time frames here are my intraday structures because they're gonna tell me the medium term direction, and then my scalping time frames are gonna be telling me pretty much my entries. Right, short term, middle term, big term. That's pretty much.
Let me ask you this, Fredo. I'm not on the charts looking at it all day long. So what I've been doing is, when I see that break of structure, okay, so like you're on the 4 hours. So, for example, when I see that break of structure, let's say you drop down a time, go to the 1 hour, for example. And I'll give you like an example of what I'm used to doing. I don't know if other. So once I see that this broke the structure, what I'm doing is I'm looking at making my pending order here. So I'm just analyzing it, and then I'm basically placing that order as soon as this breaks the structure. So I'm not really paying attention to all this stuff that's going on. I'm just placing that order, and I may look at it at the end of the day, and if it doesn't come and hit it, depending on the situation, I may still leave it, or then I'll delete it. So
then let me ask you this. If you're placing a pending here, why are you buying here?
Well, because I did the exact same thing, but on a smaller time frame.
But you're not. But you're doing the same thing on smaller time frame, but you're not referencing the intraday or daily time frames. So ultimately, you're going against what you're still saying. You're going against what you're saying right now, because if you did the same thing here, right, then that means you're not taking into consideration this whole thing, which means you're not taking into consideration this whole thing.
Yeah.
You see what I'm saying?
Yeah.
So you're going against yourself. You're contradicting yourself, because yes, price is fractal, as in it does the same thing on all time frames, but you still have to reference the higher time frames because they're the ones that give you the bigger time direction, right? Because ultimately you're trying to catch that fat daily candle through intraday scalping moves to get the highest RR.
So if I want to be a scalper with this strategy, obviously I can't be looking at the dailies or anything like that. It's not like I'm targeting, huge equal highs, really high highs or really low lows. What would you just maybe looking at the 4 hour and down, an hour and down?
No, use all of them, bro. You have to use all of them, because it doesn't matter the duration of your trade. You still have to follow the market direction.
Yeah, I guess I'm trying to trade the
You're
difference
overthinking
you
this
know,
way too much, bro. Honestly, you're
yeah,
overthinking this way too much. Bro, follow your time frames, follow daily, follow weekly, follow monthly, right? But with reason. Just because your monthly is bullish doesn't mean you're buying every single day, you know? You have to reference that and you have to create a bias based off those references, right? And then that is where you then start looking for executions based off of those references. You get what I'm saying? So you're overthinking this too much. It's a very simple process, but it can be complicated if you make it complicated. Right? By no means is it easy, right? By no means, right? But you have to make it make sense. Because
now let's
based off your
say,
explanation, bro, you literally confused me, and it sounds like you confused yourself there. Because you can't tell me that you're putting a pending here and then you're buying here. You know, it doesn't make sense.
yeah, I was trying to get into too many moves. You're right.
Exactly. So focus on less, right? You want to be in and out as a scalper. Why not trade less, hold your trades longer, right? And ultimately, ultimately the principles that I'm trying to show. That's
Yeah.
pretty much the bigger picture that I'm trying to portray.
Okay, now, in regards to my initial
Mm-hmm.
question, okay, yes, I messed up on this trade. I shouldn't have done it that way. But now let's just say I was following all the rules. I am doing everything the correct way. When I am getting into an actual entry, um, where would you be looking to place the stop loss? If it's like if it's like a price of inefficiency, do you put it at the end of the price inefficiency? Do you add a few pips? I mean, I know you mentioned that in the course, but I didn't understand exactly where
Well, let me ask you something. How do I take trades?
price inefficiency.
But how
Times
do I
what?
take a trade? How do I actually know when to buy or sell? Disregarding SC, disregarding inefficiencies, when we're already in there, how do I take a trade?
Confluence
Through what?
through the banker's candles,
I don't
the
know what a
price
banker's candle is,
inefficiency.
bro. Let's say this is my trade. This is my SC, whatever. How do I know when to buy or sell?
Because
This is exactly what I go
always,
through in every single pair breakdown.
how do you know when to buy or sell?
Mm-hmm.
Make sure you know all the confirmations.
No, bro. Reaction of the POI. That's how I take a trade. I show that in every single pair breakdown. I show that um in every single what are those called? Pair breakdowns and every single previous markups. Right here. Right? This is an SC on a higher time frame, right? Remember this is one last push down here. Right? This is corrective move, right? This is the final low that created the final high. That's a market structure break, right? You can say these three candles here are potentially like an M2, M3 SC, right? This is my entry. That's my entry. And then obviously going down, right? Obviously that's how I would take it for this one, right? And let's say I missed that entry. Next market structure break here, right? There is, right, indecisive moves here. That's an inefficiency fill. And depending on how aggressive you are, you can either put that above that or above this, right? But either way, right, reaction to the POI, bro, that's exactly what I preach in the course. Like, and you didn't answer that to me. So what does that show?
I'm definitely not understanding everything that I'm
Exactly.
hearing.
So where do you go from here?
What do you mean exactly?
What are you gonna do from here?
I mean, nothing. Keep on practicing. That's basically what's
do
learning.
you have your trading plan written out?
I'm working on that. Yes.
So how are you trading without a trading plan being completed?
Well, because I'm always adjusting, and fixing it up.
Okay, so just show me what you got now. Obviously, don't show it to me on Zoom. You don't have to show it to me on Zoom. You can show it to me privately, right?
Yeah.
But You obviously you need that trading plan there, right? You obviously need your journals there too, right? You need to figure out why your trades are going wrong, right? And if you don't know, that's the point of the journals, then that's the point that you send it to me, right?
Yeah, I'm also having a bit of trouble. Like even when you get into the sponsor candles, I know it depends. I know it also depends on the trading plan. I get that, but
Depends on the trading
as
plan, depends
far
on the
as
pair, depends on the time.
like the wicks or the close of the candle, that's another thing I'm struggling a bit into like going back and forth.
Those
Is
are
it
more
the
intuitive things though. Those are more things you catch on with time, right? So it's not something I would be too worried about. Right now, I would be more worried about understanding, the style and then making it adapt to fit you. That's ultimately your goal, right? That's the first thing I say here.
Yeah, I mean I get most of the stuff, man.
hmm
I do. I get most of it.
Then
It's
then
just
then what do you think is what's holding you back?
the small details that's I think
Mm-hmm.
the main thing, like like the entries, for example, like finding the
Mm-hmm.
correct end, like the point of interest, like what you're saying, that you're preaching. I mean,
Mm-hmm.
I get the logic. I'm having a bit of trouble finding those specific point of interest
Mm-hmm.
and seeing how you're analyzing the reaction to it. That's because of all the time frames and everything else.
Mm-hmm.
I get break of structure, I get price inefficiency. It's just finding those correct. Um, I guess points to focus on that specific time frame.
Oh,
That
okay.
that's it.
Mm-hmm. So where you go from there then is obviously continue to study, obviously, and look left, bro. Whatever your pairs are, look left. Figure out why every move happened, whether it's an inefficiency, whether it's an SC, right? And not only that, but also pay attention to key parts like structure. Pay attention to where time. Pay attention to the speed, the momentum, right? But it's all these details that you have to prepare yourself because without knowing what happened left, there's no way you're gonna project what happens right. Right? That's as simple as it gets. And that's pretty much the basis behind that pair breakdown video, um, which will probably be uploaded as soon as I find not find the solution. We pretty much found the solution. We just need to implement it, which will take time. But that's pretty much the basis of that video. Look left, pay attention to what move happened, when it happened, how it happened, right? And then obviously look at how big moves are. Look at and you can judge that with pips. You can judge that with RR, right? But you have to know every single detail of your pair before you even attempt to trade it.
Yeah, I mean, I'm
And it's
also
it's super. It's like I said, by no means it's not easy. It's not easy by any means, but it is very time consuming. Very very simplistic but challenging.
I will admit, I mean, I'm not gonna lie, I'm also kind of jumping in with the Lions because like the two pairs that I focus on are gold, and I also focus on US 30.
hmm
I like the fast moving pairs. Maybe
hmm
that's why I see so much craziness going on that it gets a bit
So
overwhelming.
zoom
And
out,
I
zoom out.
fully
Take trades off of your
feel
higher time frames for the first part. Like for example, like you said, right? This could be bullish, right? Based off of here, right? Take these trades here. Take these higher time frame trades. Don't focus on the reaction. Focus on winning a trade first based off following structure. That's your first goal. Then try to implement, the higher RR, right? Because let's say this right here is a trade scenario. I'm not saying it is, right? But let's say it is,
okay.
right? Focus on catching these first. These 3 to 1s, these 5 to 1s, and then focus on trying to get that reaction right from a 15-minute time frame. Let's say that cuts your stop loss in half, and then with time it'll evolve to that 3 minute, 2 minute, 1 minute, where then these become 40, 50, 60 to 1s. But obviously it takes time, right? Maybe that's something I didn't explain properly. That your first focus is obviously trying to win a trade, right? Your first goal isn't to
Yeah.
learn how to use M1 and use all that stuff, right? Because winning these, even if it's just an H1 3 to 1, those wins accumulate with time and they build your confidence, right? And
Yeah.
without that confidence, right, you ultimately become demotivated.
in a situation like the one that you're giving an example, would you focus on the sponsored candle there, or would you focus on that inefficiency that you see right on that 1 hour?
Focus on
That's the
both.
other thing that kind of gets
Focus on
tricky.
both. Right? How did I say I take a trade?
The point of interest.
No, how?
How do you take a trade?
Yeah, I literally just answered that 10 minutes ago.
I have the same answer. The confluence.
Reaction of POI, bro. Reaction of
Very good
POI, bro.
trade.
This is what I've been saying, right? If there's 2 points of interest, I'm gonna mark out both, and I'm gonna wait for the reaction to tell me how, to when it's ready.
I know this might sound stupid, but what exactly do you mean when you say reaction of the POI?
Bro, I literally just showed you. Are you? Hold on.
Yeah,
I literally just.
I'm slow. I'm sorry, man.
No, man, it's
I'm
it's
slow.
cool. It's cool. But look, but
I
did you not
understand your
see?
logic. You're
No,
not
no, no.
trying
But
to smile.
did you not see what I said here about this? Where is this? This right here, where I said, I think it was like here, right? Let's say this is a higher time frame SC, whatever, right? I'm not taking my trade based off that time frame, right? I used to, right, when I was first, trying to understand whatever this is. No, that's the wrong one. Reaction of POI, bro. I literally just said this, right? Remember when I highlighted this here, right? And then it's about what's happening inside of here that matters to me.
Yeah. So what's happening in the point of interest? What you're saying?
Exactly. That's yeah, bro. That's literally what I'm saying.
You need dumb it down type words, man.
Nah, look, right? Obviously, structure here, right? Structure break here, right? Potentially, these last three candles could be like an M3SC. Right, let me see if I can show that. M2SC, right? So, right, there's obviously two possibilities. It could be this, right? It could obviously be these three full candles there, or if your eyes see it, price inefficiency there. And depending on how aggressive you are, put at the high or right above that. And then that becomes your high RR trade. You know what I'm saying? Like this is exactly what I show. This is like this is what is shown in the course, bro. Like this is exactly well, I mean from what I believe, right? Correct me if I'm wrong. Right? If not, I'll go
Absolutely,
redo those
you
videos now. You know what I'm saying?
you do speak about it. It's just I guess the way that I understand it. So
Mm-hmm.
just to kind of clarify this, so when you say reaction of the POI, what you're referring to is you choose a point of interest on, for example, the 1 hour, and then the reaction of that is whatever's happening on the smaller time frames that you're
Inside,
analyzing.
yeah. And I want to reason the risk. Because all a
Okay, so
POI is a reference point. That doesn't mean I'm gonna take a trade off the reference point.
okay, so
Right, you can do that. You can do that, right? Which is what you did, right? And what happened?
it
It
went
went the
south.
wrong way because obviously
Yeah.
we weren't waiting for reactions, right? It's not always gonna give you that perfect reaction, but when a move is derived from higher time frame, you're gonna see it happen throughout time frames. You're gonna see it happen. Right? It's all about training your eyes. You're catching that follow through precisely. You're catching the follow through because this is the reaction of whatever the POI is, right? The break of structure, and then that is the pretty much the initiation of the follow through, and the follow through itself is the move that you want, which is the fat move. You know what I'm saying? Yeah, you see, and this is all you need, right? This is just a derived form of H1 here, right? Whatever this SC is here, Obviously, you go from the open. And I went to the wick there just because there's a possibility that there could be something there. So all I did was wait. I didn't mark out 50%. I didn't do any of that. Right? You can, right? But at the end of the day, it's all about the reaction. If you don't get the reaction to occur to go into your side, right, then, your odds of winning a trade are not going to be there.
Yeah, so you're going to wait for it to be formed on the smaller time frames and then go ahead and try to re-enter.
Mm-hmm.
Okay. Okay. Now I get. Okay. I appreciate your explanation. Sorry for
No, that's cool, bro.
sounding like that one. Yeah,
That's cool.
I get it.
But yeah, I mean, damn, it's almost an hour call. I haven't had an hour call in like a while. Let's see. So does anybody else have any questions? Or just want to talk about anything in general? How was Sergio's call last night? Not last night. It was Thursday. How was Sergio's call? I was asleep.
We could talk about how the Miami Heat are going to win the championship.
I'm talking about what? I'm sorry? But yeah, guys, I mean, is everybody else doing good? Got Christian on here. I know Christian's worked hard. Christian had his issues at first too, but doing good now.
Yeah, the call was lit, bro.
Was it though?
Yeah, but you slept on it, literally.
Yeah, bro, you're not funny, bro. I'm sorry. But yeah, does anybody have any questions? Yeah, I guess we'll just end it off there. All right, guys. I'll see you Wednesday, and we'll go from there.